welcome to the B4 Business Brunch. And today I'm welcomed by Hamilton Gilpin from Bitcoin Beats and Brad Mills all the way over from Canada. Good afternoon, good morning, good lunchtime. What time are you now, Brad?
Lunchtime for me.
Fantastic. Well, I appreciate you joining us. Now, I wasn't expecting to join these two fine young gentlemen, but they've asked me to come in and be their compare, and I'm the most inadequately qualified compare when it comes to Bitcoin because I know absolutely nothing about it. So you guys are going to help me and hopefully some of our viewers find out more about Bitcoin, what it's doing, what it can do for your business, etc., etc. So Hamilton, just give us a bit of background about you and what you do. You're based over in Cheltenham, correct?
Yeah, so my name's Hamilton. I live in Cheltenham. I've traveled the world, had some very good mentors, and I was first exposed to Bitcoin years ago now, and I ended up being attracted to it as a trading thing, right? So what I ended up doing was learning trading and then basically taking advantage of what it's known for generally in the public eye, which is volatility, right? So I saw that, I was like, right, well, people can't trade things that go like this, but if something goes like this, that sounds quite profitable. So I decided to learn that as a skill. And then from that, I've basically been building up a portfolio, which has gone really well over the past few years. And from that point as well, been selling courses and teaching other people how to trade it as well, right? So I know a little bit about the uses, about how it works, but I believe Brad will know a little bit more about the tech side of that and like dive in a bit deeper about that. But the use cases for me are pretty obvious, and that's essentially why I like it. It's trading and obviously all of the benefits that come with it as a tech.
And Brad, give us a bit of background about you and how you got involved in this wonderful world of Bitcoin.
Sure. And I'll say first too, though, that you're probably more than qualified to be asking us these questions, because I imagine most of the people that are in this networking group probably have no idea what Bitcoin is either. And that's only, 1% of the world has knowledge about Bitcoin. So the rest of the world is coming on and trying to figure this out. So it's good to have a beginner's mind, because most people are coming at it from that frame of mindset. And that's what I like to.
Thank you, Brad. You made me feel a million times better already.
I try to be like that too. It's like you don't want to be disconnected from what the average person's like first onboarding experiences with this stuff. It's kind of confusing and it's new and it's different, and it's kind of seems sometimes like a scam or a Ponzi scheme, or it wastes energy. Like there's a lot of things that the media tells you about Bitcoin that it's you get skeptical, but then as the price keeps going up, then it's kind of hard to challenge. Hard to not challenge your thinking about it and start looking at it. So
exactly. So who's going to give us our first sort of beginner's guide to Bitcoin then, and how it works, just the fundamentals?
I'm happy for Brad to be honest. I believe you've been doing it longer. You're going to have practiced the best simplified way to explain it to a complete.
Well, sure. I want to ask too, on your YouTube channel, I was just looking to see like what were your most popular uploaded videos on the B4 Business TV show. So I could kind of see like what are your people watching, and the number one most viewed one was the Oxfordshire housing crisis documentary. Can you tell me quickly just what was the Oxfordshire housing crisis?
Well, it still is a crisis, I suppose. It is a bit of a dramatic title for it. Just looking at basically the affordability of living in Oxford. It's an incredibly expensive place to live, and that obviously has an impact on recruitment and et cetera, et cetera. So before, well, it's still expensive to live here, obviously, but now with the ability for firms to recruit remotely, that isn't such a barrier. I'm hearing that more and more actually over the past few weeks, that firms are now looking beyond Oxfordshire to recruit. So although it's still an issue, it's maybe not as serious as it once was. Anyway, I'm supposed to be asking you the question.
Well, I think it's all related, because Bitcoin is kind of it's a technology, and it's an investment, and it's a movement. And as we see the bubbles heat up all over the place in the stock market and in the housing markets, and even things like trading Pokemon cards now, people are paying hundreds of thousands of dollars for super highly speculative fringe investments. And that's because the central banks of the world are just printing money hand over fist, and they're all in a competition with each other to devalue their currency against the other central bank without causing hyperinflation. So the US is printing trillions and trillions of dollars a year, trying to prop up the stock market and make it more competitive to sell their bonds to, into the global markets. But as COVID showed, all these companies and all these big pension plans and the stock markets and everything, it makes no sense. Like, all the countries are in deep trouble with their debt, and they don't know how to get out of it because they've already lowered rates to, in some places, like negative. In the Eurozone, there's some negative rates, and in Japan, there's negative rates. In Canada, where I live, in the US, it's pretty much zero. And Ray Dalio put out a piece on LinkedIn actually last year where he kind of predicted that this was where it was going to happen, and things like hard assets like real estate, gold, and Bitcoin, things like that, would retain more value as the central banks just can keep making the money printer go burr and printing trillions of dollars and getting into more and more debt. And things like, I guess, the Oxfordshire housing crisis, I guess, is kind of a symptom of a broken money system, because your costs keep going up. The value of your dollars and your euros and your pounds and all that keeps going down for what it can purchase you. So wealthy people are flying out of holding these depreciating assets, dollars and pounds and euros, and they're trying to invest in things like businesses or homes. And the really wealthy people are investing in real estate as a speculative store of value. So that's why the housing costs in places like, I guess, Oxford, and in Canada, we have Toronto and Vancouver, are really overheated real estate markets, because the really wealthy people, like the 100 millionaires or the billionaires, the super high net worth individuals, they're investing in homes as stores of value. And that's making it go up way higher than the utility value of the home or the flat or whatever it is that they're buying. And that's going to eventually correct in a bad way, I think. And that's what a lot of people are starting to look at now with Bitcoin. They're seeing Bitcoin as the evolution of a store of value asset as money. Bitcoin is like money that can't be printed by a central bank, and there's no central party that can come in and say, well, we want more Bitcoin, so we're going to change the rules and make more Bitcoin. It's capped. It's hard capped at 21 million, and it's in the code. And it's had over 10 years of a big, bounty out there for any hacker. If people think they can hack Bitcoin, well, it's not been done yet. And the smartest people in the world have looked at it and tried, and they can't hack it. It's hack proof pretty much. There's also, large investors like Stan Druckenmiller and companies like Tesla started to look at Bitcoin as a hedge against this central bank money printing. So we all feel it, the way that inflation, they say that we don't have inflation, right? They're telling us, oh no, there's no inflation, but you feel it in the prices of everything. Like, everything's going up in price, and your wages aren't increasing with that drop in purchasing power. So most people don't really put two and two together and see that what your dollars or what your euros or pounds can purchase now compared to what they could purchase 10 years ago is way less. Like, you could purchase the same sort of value with an ounce of gold 10 years ago that you could with an ounce of gold today, but not with your fiat money. So the Bitcoin is just a big experiment that kind of worked out as a way to try to make a decentralized currency that could hold its value and gain value based on programmatic rules of like mimicking gold, but in a digital way. So Bitcoin kind of has gold-like properties, but it's like gold for the internet. And of course, everything's going digital, and that internet trend is disrupting everything. So that's why you're starting to see businesses get on board with Bitcoin. So it makes a lot of sense for people in your community to like pay attention to Bitcoin, not just as like a way to protect themselves from the money printers, from the central banks that are going to continue to go in debt. And I mean, I guess that's probably one of the reasons why the Eurozone kind of agreement, the currency agreement is kind of on a precipice right now, because there's countries like Greece and stuff that are in real bad shape debt wise. And countries like I guess France and Germany are like, well, we don't want to be just continually bailing out the countries that are doing the worst. And then when Britain exited that whole agreement, it kind of like, it's sovereignty, right? It's like you're going back to taking sovereignty over your own currency. And I know that's like politically, some people don't like that, some people do. I don't actually know too much about the way that people think about it politically, because I'm Canadian, but we've got the Queen on our money, so we pay attention to it a little bit. But it does, even
she might not be on for much longer after.
Yeah, it's like, as a regular person with, maybe you have a small business or something like that, even going out of the, if you were somebody that was on the side of Brexit and going back to your own monetary standard and taking sovereignty back, even if you were on that side, you as a small business owner or as a regular individual, you're still going to suffer under any government that's going to print money and devalue the savings in your bank account. And the worst case scenario could happen, which happened in Cyprus and Greece, where the debts just get so big that they have to default, and anybody with money in the bank account can have a bank bail-in happen, where you just wake up one day and it's like, well, you can only take 100 pound out of the machine now, and 100 a week is your limit, and yeah, your money that was in the bank account, well, half of it's gone. That's a bank bail-in, and that's happened many times in history in the Eurozone and other places. And all the major banks have bank bail-in provisions. So they say that don't worry, in the US it's FDIC insured. They say, oh, don't worry, it's FDIC insured. That's a joke. Like the FDIC insurance fund has $150 billion in it. Warren Buffett has more cash than the FDIC insurance fund has. It's ridiculous. So if they actually did have some major bank crisis where banks start to fail, they don't have enough money to cover all the banks that are going to fail. It's a lot of people think Deutsche Bank is bankrupt, and like they've been caught rigging the gold markets and all these crazy things. Banks stop lending to each other when this starts to fall apart. And when the banks stop lending to each other, that's when things can get really hairy. That's what happened in 2008 with the housing crisis. And it's, all of this to say is that like the system of money that we use right now is not in good shape. And there's only two paths we can go to sort of get out of this in a way that's not going to cause a global depression. It's universal basic income and modern monetary theory, and just everybody gets some debt jubilee, like you get half your debt written off, and we just kind of agree that the national debts don't matter and they're not going to get paid back. And it's a new Bretton Woods type of system where we all agree that we're going to go on this new monetary standard where nobody really agrees, that thinks the debt's going to get paid off. And we all are now just on that page where debt doesn't matter anymore. It's all about GDP and business activity. And we got to put a safety net in for all the people that are going to lose their jobs from automation and things like that. And that's actually a hopeful future. But even in that scenario, the dollars you have and the euro, whatever, the pounds you have in your bank account, it's not going to do very well in purchasing power, because there is some fundamental rules to money. We've got thousands of years of money history, and 99% of all the fiat currencies eventually fail because people get in charge of the currency. They start printing too much and they ruin it because they think they know better than the market. So I think people that have strong businesses, they're going to do okay. People are always going to want to like ride the bus and stuff like that. Like people are always going to want to eat.
I wouldn't say that at the moment. It's talking to
that's true. Yeah.
Local bus companies, they'd be desperate for people to ride the bus. But,
yeah, I guess in a pandemic it's a little different.
Yeah.
But I guess what I'm trying to get at is, in terms of Bitcoin, if you're a business owner and you're thinking, should I pay attention to this? There's three ways that you should pay attention to it. The first way is protecting your corporate treasury against the continued devaluation of the fiat money system and the dollars or whatever it is that you have asset exposure to. And if you have a business that's kicking off tons of cash flow, if you're doing really well, and you're not spending all of your money on expansion, and you've actually got some money that's piling up in the bank account and you're saving, that's when you should really take a look at replicating what like Michael Saylor from MicroStrategy or even Tesla or Square and these big companies are starting to do, where they're putting some money in their bank account into Bitcoin and holding it as a treasury reserve asset. That makes sense, because if you just got the money sitting in the bank account, it's not doing you any good, and soon they're going to go to negative interest rates. Well, you're just going to be literally like losing money to the negative interest rates and to the continued depreciation and devaluing of your fiat money. Put it into a hard asset. And that's why some companies buy real estate. They invest in real estate trusts and things like that. But the bond market is getting really bad. Like, people aren't getting returns on the bond market. The real estate market's way overheated, and dollars and fiat money doesn't seem to make much sense to hold anymore. So Bitcoin is actually a really rational choice to put some of your excess cash flow in. Now, if you're a business that doesn't have tons of excess cash flow and you're spending all of your money to survive and like grow your business, doesn't make much sense to buy Bitcoin with that, because you're going to need liquidity, and you don't want to be exposed to the volatility of Bitcoin for your short-term Bitcoin business needs. If you've got staff to pay and stuff, and Bitcoin drops 30% in a week, that's not going to be good stress to be under. I mean, it's better. It's if you have spare cash flow and spare money in your bank account that you can put and sit through a drawdown of 50%, say, of fiat value, then it makes sense to be in it for the long term, and you're going to protect your business's treasury that way. But if you're spending it actively, if you're growing, if you've got payroll, I wouldn't want to do that. I wouldn't put my business's treasury in Bitcoin there, because as someone who's been in the space for, since 2000, and I've run businesses on,
Brad, we
on
lost
Bitcoin.
you. We lost you when you were saying the year. Then you've been in it since 2011. 2011. Okay.
Yeah.
So 10 years.
10 years, and I've seen a lot of volatility, and I'm fully aware
80%
that
sometimes, right?
Oh yeah,
Yeah.
I'm very aware that this is probably going to continue. I mean, if there's a real hyperinflationary event, or if the bond market collapses or the stock market collapses and we go into a recession or even a depression, all assets are going to get hammered, even Bitcoin.
Yeah.
Yeah, it's short term though, right? But Bitcoin in 2020, after the COVID crash, it was the fastest asset to recover, and it recovered bigger and better than any other asset without any government interference. Like, there was no quantitative easing or bailouts for Bitcoin. It was just that's when yeah. So that's when JP Morgan came out and said, well, Bitcoin's here to stay. It's finally proven itself through a big crash that it should have died if it was just a bubble or a tulip mania or whatever, and it proved itself out. And that's kind of 2020 COVID crash brought a lot of big name investors to see that this is a real asset. It's a serious thing, and not only is it serious, but we're going to start investing like percentages of our treasury in our portfolio, and that started to cause a lot of fear of missing out by high net worth individuals who are like, well, if Stan Druckenmiller and MicroStrategy, a public company, are saying this, and JP Morgan is saying this, well, I guess I should get some Bitcoin. And then everybody starts to pile in, and that's why we see the price rising so much.
I do want to bring in Hamilton, and but I'll just ask you another quick question, and just also to mention, I mean, I've learned an awful lot in just 15 minutes. I'm not quite up to speed. Probably need to go on one of Hamilton's courses, but fascinating to hear you, Brad. And maybe just give us a quick plug for your podcast, if you will.
Yeah, if anybody wants to listen, my podcast is kind of a funny, sometimes it's serious, but it's called Magic Internet Money, and we discuss a lot of different topics. And Hamilton, I got to have you come on the podcast soon. We've been meaning to do that for a while. You got to come on.
Yeah, man. Happy to.
And also, you were saying before we started that you're a Clubhouse addict now as well.
Yeah, I would seriously suggest if anybody can get themselves a Clubhouse invite, come into the Bitcoin rooms if you're new, because the Bitcoiners are like 24/7 running running Clubhouse rooms to just teach people about Bitcoin. The club, if you get on Clubhouse to follow, is Bitcoin Cafe, and there's another one, the Black Bitcoin Billionaires, where these two clubs run 24/7 rooms, like just helping new people about Bitcoin. It's great.
Do you see, just digressing on Clubhouse just quickly, Brad, do you see, I mean, I think you're seeing the impact over there significantly more than we are here. I mean, obviously the time difference has has been quoted as a reason why not as many people get involved over here, but I'm sure that will smooth itself out. But do you see it? I mean, it's already having an impact on social media traffic on the other platforms. Do you see it continuing to do so?
Well, I think like anything, it kind of it kind of will die out a little bit, I think, but
It's a bit of
at the beginning you get pretty addicted to it because it's an awesome new way to communicate. And I know myself, like I stopped recording my podcasts because I'm on Clubhouse so much. my team is mad at me because all I'm doing is on Clubhouse. I'm not recording any podcasts. I did a few since Clubhouse, but I'm like, yeah, anybody that finds Clubhouse is probably going to get hooked on it for at least a month. And then you can kind of find a way to like balance it in your life so that it's not taking over everything.
So I want to bring Hamilton. Just want to ask you one quick question, Brad. In the last 10 years, how many times did you think, Christ, I just can't carry on with this? This is going nowhere?
Well, actually, it was just the one time in 2012 because when I heard about Bitcoin, it was $5, and I was pretty excited by it because I was a fan of internet stuff and I was an early technology adopter. And I thought, wow, digital money that's like PayPal with no company in the middle, that is internet native. That's amazing, and it's like replicating gold. That's great because it's gold. Gold is way better than dollars. I want some gold, but I'd much rather have digital gold. So I saw it right away. I was excited, and I sent my money into the exchange. By the time I got my money into the exchange, I started mining Bitcoin with my gaming computer in my basement. It had gone to $10 in like a few weeks. And then I bought some, I started mining it. It shot up to $30 in a couple of weeks. So by the time that it's kind of like what just happened again. It was like $10,000 not too long ago. Now it's nearly $60,000. That kind of happened to me when I first heard about it 10 years ago. It was $5 and then it went to $30, and then it crashed all the way down to $2. And I was like, okay, this is not a real stable thing because I was getting all these businesses. I was neglecting my other business, and I'm a serial entrepreneur, had a couple of businesses going, but I'm like, I got to build Bitcoin businesses and accept Bitcoin. And I was like, pretty deep into it, but then the volatility really turned me off in 2012. I kind of sold both of my Bitcoin businesses that I had built because I just didn't want to deal with that kind of level of volatility, 80% swings in a month. So I kind of stopped, and I kept some of my Bitcoin. I sold half of it at like $30. I thought I was a genius because I got in at 10 and sold at 30. I'm like, I'm so smart. Obviously, looking back, that was a poor sell, but thankfully I kept enough to kind of keep my interest peaked. And I was like more activist minded about it. I was like really excited by the idea of something I could get behind that was an opt out of the central bank money printing system, and using all of our taxes to go fund wars that don't make any sense, like that kind of stuff. The libertarian sort of viewpoint kept me excited about Bitcoin, and the Austrian economic side of things kept me excited about it. But I definitely kind of like put it on the back burner, went back to my businesses for a couple of years. And then in 2013, when the price mooned again, it went from like that low of $2 over a year and a half. It had slowly climbed all the way to like $200. And I started looking at it again saying, okay, this thing is back. So I got all the way back down into the rabbit hole and started paying more attention again in 2013. And then, so I haven't really gotten out since then or thought like this isn't going to work. Been pretty convicted. I had pretty high conviction. Once you go down the Bitcoin rabbit hole, it kind of brings you to other philosophies like Austrian economics and long-term thinking and game theory and things that like will stick with you. Once you really understand Bitcoin, you got to have a long journey of learning about not just what's Bitcoin, but what is value itself, and what is the macro picture looking like, and how does Bitcoin fit into this crazy fiat world we're in. And it's definitely something that like it waxes and wanes in terms of price with most people, because as the price goes up, of course, you're going to be excited about it. But as the price goes down, you might be a fair weather friend to Bitcoin, and you'll just kind of like, maybe we'll sell your Bitcoin or you'll keep it, but you just will go back to regular life. But I would highly recommend everybody go down the Bitcoin rabbit hole and learn, like read the books, follow the podcast, go on Clubhouse, and learn about why Bitcoin is valuable. And not like crypto. I would definitely advise people to avoid like crypto. learn about Bitcoin. Bitcoin is the thing you got to pay attention to.
Keep your password safe.
Yeah.
Yeah, you definitely got to do that.
But you heard the story about the guy that lost his laptop on a rubbish dump somewhere in Wales. Did you read that one, Hamilton?
Yeah, I read that one. Yeah. And it's
I'm sure
like
you've heard plenty of stories like that, Brad.
Not quite that bad, but yeah, I've lost Bitcoin before on dumb things that I wish I didn't. Yeah.
Well, we've asked Brad 2 questions and he's filled up the whole half hour. So no wonder he's got a podcast, but it's been, I really appreciate your time. And Hamilton, can you maybe just follow that if possible by just giving our viewers an opportunity maybe to engage with what you do and find out a bit more about how to master Bitcoin, if that's
yeah. So my advice with Bitcoin, because a lot of people will be watching this thinking, hey, this is something I can get rich quick with or whatever. And this is why where Brad says, don't look at the other cryptos, because that kind of greed mindset and that kind of adrenaline can really cloud you. And then you just buy all these random cryptocurrencies and then you just lose ridiculous amounts of money from doing that, right? And me, when I first came around to Bitcoin, it was about, well, no, I first heard about it when it was about 14K and it was coming up to 20K, and I missed that whole section of the run. I remember thinking, oh, that was my ticket. I was poor at the time. I was like, if I'd have just got some money together and bought then, that would have been it, and that would have been good. And my advice would be
2017 Hamilton.
Yeah, as it was coming up in 2017, and I just didn't have the money to put into it. I just watched it climb and climb and climb and climb, and luckily I wasn't one of the people that bought the top and then just got completely obliterated. But I did decide to start trying to hodl when it was about 6,000, and then it halved to 3,000.
Is that a term? Is it hodl?
Hodl, which basically means hold on for dear life or whatever it is, right? It's a misspelling of hold. So you'd hold it over time, and then it just got hodl, HODL.
Any Spurs fans out there getting a bit excited about that term, but you might not know what that means. Anyway.
Yeah, and from that, I basically have obviously been learning to trade over the years and basically not doing like the opposite to what Brad's doing, because I do believe in it. And obviously the maths checks out. It is deflationary. It does go up over time. But what really attracted me to it was the volatility, right? So if you can buy it really low after an 80% drop, you're probably going to make some money over a year or something, right? If it's just gone up 25%, my advice would be maybe do a bit more research and maybe don't just jump in and expect to double your money, because when something goes up like that, a certain percentage from my experience anyway, it will retrace and you'll be stuck in that position where you are essentially buying each top, and then it comes down, you're like, oh, this is a bad investment. Then you sell it and then it goes back up again, and then you buy it again, trying to kind of catch it and chase the rabbit, right? So I would say with that, just be careful if you are looking to invest in Bitcoin. And I would say you could look this up online. It's basically a thing called dollar cost averaging, where you buy it with a small amount of money that's not really going to affect you if you were to lose it, or if it is going to be really volatile. And as Brad said, with the companies getting into it, they're not investing their entire like net worth of that company into it. They're just investing a small percentage. That way, if it does retrace 50, 80%, they're not going to have that bad of a time. And it's something that, yes, it has proven it goes up over time. So it's important to hold. But when you hold, you have to hold it, right? You invest small amounts over time and then hold that over time, and then it will make money. That's essentially my take on it anyway. Apart from that, I would say the uses of it, from my experience, I have a girlfriend in Thailand, and it's very, very hard to send money to her. I've got to pay all the percentages, I've got to go through all the banks and stuff. With Bitcoin, I can literally just press send it to her address, and there's no banks in the way, there's no companies, it's all there. And it's even like it's a public ledger as well, right? So it's recorded there. If anyone wanted to check me out for tax or anything, it's right there. You can check it out, and like that's fine. And that in itself, being something that essentially is run by the people and runs itself, that's just so useful, because you don't have those blockades. If you want to send money to like whatever, like Africa, Venezuela, whatever, even if it's business to business, it's all recorded there, and you don't have those blockades that are going to take 5 working days, a month, or whatever, depending on the amount, right? And I think that's one of the best benefits for me generally with Bitcoin.
And your courses, Hamilton, how can we find out about engaging with you on your courses?
So my courses, things what I teach is trading, right? So I'm not I'm talking about investing now, right? Because I'm thinking from the opinions of your viewers, right? That might be looking to invest over time, but trading is more over shorter time frames. So what I teach is essentially how to trade day by day, how to trade the momentum and know when to buy and sell, which will work over the long term. But I would say if you did want to check me out and help me out at all, I do a little forecast every day on my YouTube channel, which is basically I'll walk through my predictions for the short, mid, and long term for Bitcoin. And that's just like, that will help people learn the momentum over time. I wouldn't necessarily say go out there and buy my courses, because I'm not out to kind of get everyone on board to buy my courses. I'm more out there to teach people over time, essentially provide free value.
That'll probably be a surefire way that people want to go on your courses. Not selling, you're not selling it. I know about selling from you, I think, Howard. Well, we'll include a link in the YouTube notes below for both your podcast, Brad, and your courses and website. You have a website as well, Hamilton, yeah?
Yeah, bitcoinbeats.net.
But been an absolute pleasure talking to you both and finding out a bit more about the elusive Bitcoin. Predictions for value in end of 21, Brad?
End of 21, I think we could be as high as $250,000 US by the end of 21. By the end of
what is it now at the moment?
55, something like that.
Yeah.
Wow.
I think within 8 to 10 years, I think Bitcoin is $1 to $10 million per Bitcoin.
I know that about the capping thing, so that will never change.
The cap? No, it's hard capped. Bitcoin is governed by consensus, and the consensus of all the users, like Hamilton was saying, and all the people who run nodes. That's the cool thing about Bitcoin, is you can run a node. Anybody in the world can run a node, and there's 100,000 people running nodes right now, enforcing the rules of the network. And all of the people that give Bitcoin value are the people like us, and the people like, even now it's Wall Street and institutional buyers and these mega high net worths. They're all buying Bitcoin because they value that property of Bitcoin is limited at 21 million. And there's no way that can be changed, because that's kind of been tested before. We've been in the 10 years of Bitcoin's history. There've been people who've tried to change Bitcoin, and they've kind of got forked out of the system. And now they're off making their own coin, like trying to sell their own coins because they couldn't change Bitcoin. So nobody really can change Bitcoin. It's governed by the rules of the network. And if you try to change Bitcoin and make, like, if a government, say, tries to take over Bitcoin and say, well, we're doubling the supply because we need to go to war with some other country, something like that, they can't do it. They'll be on their own coin. They'll be on like a USA coin or something like that. But the rest of the users of Bitcoin will still be running their nodes, enforcing the rules of Bitcoin. So it's like, you can't run a node for the Federal Reserve. Nobody even knows how much dollars there are in existence. The Federal Reserve stopped reporting the weekly M2 money figures just recently. They stopped reporting the base money figures a while ago, years ago. It's all about like opacity, right? It's very opaque to see what's going on with the regular system. With Bitcoin, just like Hamilton said, it's all on chain. We know where the money's moving. We can see billions and billions of dollars of inflows coming in. We can see that now the growth of who's coming onto the Bitcoin network is extremely high right now. There's about 30 million unique on-chain Bitcoin users, and there's about 125 million exchange users. So there's like 125 to 150 million people that are aware of and using Bitcoin right now. There's how many billions of people in the world? Like, we've got, so it's got quite a while to grow, man. If you think that Bitcoin actually can succeed as the internet's money and a global reserve currency that's competitive with gold, because we're in a digital age, Bitcoin's market cap is right now maybe near $1 trillion. Gold's market cap is 10 to 12 trillion dollars. So even just to catch up to gold, it's got a 10x in it. And then to catch up to the whole supply of dollars, fiat money in the world, that's $80 trillion. Real estate is $200 trillion. The bond market is hundreds of trillions of dollars. Bitcoin competing with this as a real like black hole of value, sucking in all these high net worth investors to store their value in something that's actually a store of value, not speculative like real estate. It's multi tens of trillions of dollars of market cap is on the table, and that gets us to $1 million of Bitcoin. $10 million of Bitcoin is that's like if we have hyperinflation. You know what I mean? Like then $10 million is not really worth $10 million of today's
It's
dollars.
10K for a loaf of bread. Then,
Yeah,
10
yeah.
mil isn't so good.
But I do think $1 million of today's value, it's on the cards for Bitcoin within 8 to 10 years if it really does achieve its mission. Yeah.
Fascinating.
Yeah.
And you obviously concur with those. You're gonna punt for a bigger number than 250 by the end of this year, then, Hamilton.
I'd probably go lower. My chart says the next big top we have is around 100K, but obviously if inflation kicks in and all that stuff, 250 is well, like, within the reach. Like, we can get that very easily. I would say 100K and then maybe a pullback, and then if we breach 100K again, then it goes up a lot more, I would say. That's my prediction.
Guys, it's been a real pleasure to have you on and to learn a bit more about Bitcoin, and we'll, as I say, put your links in the notes below, and hopefully catch up with you at the end of the year to see whether your predictions come true.
All right.
Are you gonna get some?
Oh, I'm going out now to get some. I'm not going out. I'm going to stay here and get it online.
Just put a 1% slug in you, and then
Oh yeah, no problem.
If you lose it all, who cares? You know, it's not going to change your life. But if it goes up to $1 million of Bitcoin,
yeah,
it's a pretty good. It's a pretty good bet. It's good. It's a hedge, a tail hedge they call it.
Yeah.
I will look. I know Ed. Obviously, you know Ed Hamilton, and he's pretty seduced by the whole thing. So
yeah.
No, we'll get
Good
on.
man, Hamilton.
Yeah.
Take care. Good to see you guys. Thank you.
Good chatting with you. See you guys.